So that's the money that we're targeting, like 18 to 54% per year. So that is our fast money. And right after the election, the volatility drop and the stock price go up. Both work in big favors. So that was like 100K.
Okay.
If you only have $1,000, don't trade option. Because most people will be like, you know what, that's $1,000 I can lose, so I just gonna go and gamble it. But guess what? That's $1,000 you work hard to earn.
Yeah,
and that's why that's keeping you from becoming a millionaire, is because you have those kind of mindset.
How can stock traders improve their profitability by using options? Options trading is certainly not a brand new concept. However, it can feel like a brand new world out there for traders such as myself who only trade shares. Today, we're going to be learning from a full-time options trader who makes 7 figures with his passive income monthly strategy. You can expect to learn how do profitable options traders make money, how to analyze options, when is the right time to buy call options versus put options, how can stock traders maximize their profits using options, and finally, how to manage your risk when you're options trading. The Humble Traders podcast is made for traders who are very serious about learning the reality of trading. You're going to be getting a lot of practical trading tips and knowledge from these trading conversations. If you appreciate them, please remember to smash the like button and share this video with your trading partners. Hi Cody, welcome to the Humble Traders podcast.
Yeah, thanks for having me.
You're officially our first options trader on our podcast. So, okay, what do we, fist bump?
Fist bump, yeah.
Okay, so since you're our first ever options trader on the podcast, can you describe to our traders what kind of strategies do you trade? And we'll start from there.
Yeah, so options comparing to stocks, the major difference is that option has something called volatility. So it has an index called VIX. Usually the higher the VIX, that means that if you're a buyer of the option, you got to pay more money to get into the option contract. And if you're a seller of the option, then you get paid more if the VIX is higher. So that's a major difference, right? Because in stocks, the stock could go up, down, go in circles. You make the percentage that you make. But in options, a little bit has an extra layer of complication is the volatility. And that's a lot of stock investor doesn't know that when they first come in.
So what do you do with options? Like what kind of style do you trade in terms of using options? Yeah,
so I mostly do selling options. That just means that I always introduce it as I'm the casino owner.
Okay.
I'm the insurance broker. So when you buy your car insurance or your home insurance, you pay a premium every month. And I am the guy that's collecting that premium on the other side because I sell you an insurance contract. You make your bet on whether the stock's going to go up or down, and you're going to pay a fee for it, and I collect that fee, and that's my cash flow. So I love like selling options.
Okay, so what does that look like in comparison to day trading options? So I know a lot of people day trade and scalp options all the time. I've done that before, it didn't work. So if you could explain to our viewers what's the difference and which way is more beneficial and make more profitable.
Yeah, I think like day trading, or you can day trade the stocks outright. I used to day trade the Taiwanese S&P 500 index equivalent.
Okay.
I use future options, so I just buy and sell, ticker, point difference, I make the money. But if you want to exponentially increase the leverage, right? If you want to use $1 to control $10 worth of stock, or $1 to control $100 worth of stock, then you can use option. And most of these scalper, because when usually they have a smaller account, that's why their mentality is that they want to make the maximum amount of profit.
They want to be more leveraged.
They want to be more leveraged. So they will buy that lottery ticket. For example, they think Apple stock is going to go up today. They buy a call that's going to expire tomorrow. Okay. They spend $10 on it. But by tomorrow, the price has to be a certain point, and then the time has to happen within tomorrow. So two things has to go right for them to make money. Otherwise, they lose the entire $10. So probably that's why I get a bad reputation. But,
I see.
Yeah, that's the major difference for that.
Okay, so the way you trade, you sell options premiums
Sell
essentially.
options. Yeah. The reason why we sell option, and this is why Warren Buffett secret weapon, like if you look at their financial statement all the way back like the last 10 years, he makes billions of dollars selling option. And back in the days when he was trying to get hold of more Coca-Cola, he was selling put options on Coca-Cola stocks, waiting for it to come down so he can buy at a cheaper price. But if it doesn't come down, he will keep collecting the premium.
I see.
And that's his cash flow.
In that case, in your case then, if the stock does come down and you do get to buy the stock, the underlying equity at a cheaper price, do you own the shares or do you kind of roll and then keep trying to leverage it on the way down?
Yeah.
Would you sell the shares? Sorry, that was
that's a really good question.
Yeah.
So maybe let me back it up a little bit. I think a lot of people might get confused if I keep answering that. So we talk off record that we have our said and done strategy. That's what we call our fast money. This is where a lot of our students or myself, we use this strategy to replace our full-time income. A lot of our students go as well, or to support our monthly expense. Usually our trade close about every 10 to 20 days, sometimes shorter, a few days. So that's the money that we're targeting like 18 to 54% per year. So that is our fast money. So once we have that fast money taken care of, we use those money to say buy more real estate or buy or sell more options on individual stocks. Because selling options on individual stocks, we have a different mentality now. That's what we call a medium speed money. It's that we're not trading anymore. When I sell options on individual stocks, I'm preparing to own it.
Oh, I see. That's a separate strategy.
Separate strategy.
Okay.
So when I prepare to own it, what if, let's say I sell the put options on Apple, all of a sudden Apple dropped by 30%. And I'm back holding Apple for a few months or a few years.
Okay.
Right? So it's not really a cash flow strategy.
I see.
So this is more like I'm going to hold it for long term, but I wanted to buy in at a good price. For example, if Apple is right now at 170, I can sell the option contract to agree to own Apple 160. So by the expiration day, if Apple stocks is above 160, 160.1, I get to keep all the premium. I don't need to do anything, and I can rinse and repeat.
I see. Okay.
So that's fast money, medium money, and then the slow money is just buy and hold real estate, buy and hold stocks, buy and hold ETF.
I see. I see.
Yeah.
Okay. So obviously, all of these three, which one's your favorite?
I wouldn't say anyone's my favorite, but I think most people, when they're starting out, where they have a big chunk of money, where a lot of my students have like 100K and up, right? 100K minimum all the way up to 5 million. Something has like 8 million, right? So if they have the money and they want to replace a full-time income or just supplement it, work less, or supplement their wife's income, they use their said and done strategy. Once they take care of that, they can start building the medium and the slow money. Because if you haven't solved the cash flow problem, you don't have money to invest.
That's true. Yeah.
Yeah, just what you talk about day trading is that why, if you only have $1,000, you can't really do much, right? You might as well learn the skills that require you to make more money, so you have a sizable amount to make an impact.
So what got you into options trading, and how long did it take for you to become profitable doing that?
Yeah, so I started investing in stocks in 2011. And I was day trading between 2015 to 2017 while I was working a full-time job as an engineer, project engineer. And then I started getting into like 2018 options, and that's when we were stabilizing. We're selling options on individual stocks, and our said and done strategy is about 2 years old only. And that's where we work out all the kinks from our students or myself. We take out all the risks that we think, for example, on picking stocks is really hard. We take away that. We take away the assignments. If you sell options on individual stocks, you might get assigned 100 shares of stocks. Right. So we work around that to come up with our said and done strategy and try to make it as consistent as possible. So yeah, that's kind of how I get into the journey of me stocks, day trading, selling options to our said and done strategy, where we try to lower the return, but it's more consistent and stable.
So you no longer trade the individual stocks options. You just trade.
Said and done, no. But selling options, I still sell on the blue chip like Apple, Google, and all that. But that's the intention of if I buy it, is a buy and hold. And I sell cover calls, right?
I see. Okay.
Just to earn more premium while I'm waiting for it to go up.
Right. So like you said, you're prepared to own those stocks, 100 shares of Apple, Tesla, whatever. Well, Tesla is not exactly blue chip, but that's the plan.
Yeah.
Once you journeyed into options trading, how long did it take for you to become profitable?
Actually, selling options, like this is, the funny thing is that I was taught about day trading and I had to make a decision back in the days before I started my YouTube videos is if I ever gonna teach day trading. And I make a decisions that I will never teach day trading because I know most people will lose money because it's not an easy job. Not to say that the people who make money will make a lot of money, but most people don't have the skills or
the discipline. That's the hardest part.
They're fighting against themselves, right? So as an engineer, we're trained to perform well in a high pressure environment, like 4 years and all that, and managing a lot of money, projects and all that. But not everyone has that kind of background, right? So for me, I don't want that reputation. I don't want that kind of stress because all my students, we have Excel sheet in the background, everyone's name, when do they join, every single month, how much money they make. We know that, and we hold them accountable. They hold us accountable. We have a structure within when they make certain amount, we get paid certain amount as well. So I don't want, it's just too much stress, and I don't think it's worth it. And most of my students that I'm serving now, it's, you know, they usually invest in real estate, have their own business. It's kind of like your financial planning client kind of style. So they just want more control, and maybe they don't get such a great return from financial advisors. So they just like, you know, I want to take some back, or I sold one property, I sold one business. Here, what do I do?
You guys are in for a treat today. So Cody is actually going to demonstrate how to execute a very simple options trading strategy. Selling put options. It's a very passive strategy, and I'm actually really interested in learning that as well. Pretend I'm a 3-year-old. So explaining selling options to me.
So I know you really want to know about said and done strategy, but because that will involve some spreads and most of your audience might get confused. So I'm only going to introduce our beginner strategy, which is the medium term money. We're selling put options, and our ultimate goal is that we're ready to buy a stock at a discount price. So we're going to demonstrate that on Warren Buffett's favorite stock, Apple.
All right, let's do it.
So now we go to my watch list. I have a said and done watch list. We have Apple here. So Apple dropped about 1.68% today. That's fine. So we go in, you know, I usually look at the chart here. I don't know about you, but these charts kept getting smaller now.
Yeah, I know. Or it's either that or we're getting older and the eyes are not as good.
There's like more numbers here that I don't really need, right? You know, like usually I go through the stock, I look at what's a 1 year high. Sorry, 52 weeks high, 198.
198.
And then the low is 123. So we know it probably went up by about 50%.
Yeah, what a move.
Usually I look at 5-year chart, but I know it because I've done so many of it. Like Apple went from like $40 to like right now about 180. Right? Because when you go and sell a put option, your understanding is that you want to own the stock for the next 10 to 20 years. You're investing.
You're willing to own it.
But in the meantime, you get paid some cash flow on it. But you cannot pick a garbage stock and try to sell put option and be like, Cody, this is financial freedom. I have a consistent cash flow. You'll get smashed. Right? So you want to own Apple, but you want to own it at a cheaper price. And if you don't own it, just keep getting paid premium. That's the mindset go in. Then I look at the chart. I think up here, like we can make this bigger. Let's see what this look like.
Oh, nice. Finally, I can see.
Yeah, so I think data range 5-year and 5-year. Like this doesn't make sense. Like look at that.
This is a 5-year chart on Apple?
Yeah, this is not right. I think they probably just say 1 year.
Oh, you were on the weekly chart.
Yeah, weekly chart.
So now this is a daily?
This is daily for 1 year, right? So usually Apple is one of those stocks is like Warren Buffett put 40% of Berkshire Hathaway's portfolio in it. And then that means a lot. So you don't really have to look at much. But if you really got to be like, hey, I want to do some analysis on it, cool. You know, the high of Apple was at around, 198. Pull back, went back up, come back down. So, 170 could be a good level, right? There's some support here, you know, but even though there's not much going along here, right, it just kept going up. But I just say right now the stock price on the top left corner is at 176. That just say, okay, Cody, you know what, there's some support here. I'm okay, I'm right below it. I'm gonna own some Apple shares at 170, so I get a $6 off. Okay, I just assume that.
Okay,
does that make sense?
Like in case it drops there, you want to buy it.
Yeah, I will buy it at 170.
Okay.
If it goes below 170, I'll buy at 170.
Okay,
I'll buy 100 shares of it.
I see.
Okay, so now we come back and then we go to the famous option chain here. All right, so in case people never seen this, at the top here, these are all expiration date, right? September 15, and then 2 days, 9 days out. And usually that just say on average I go 30 days out. So there's a 30 days. So it expires October the 13th, right? And I think the market's closed. So it might take some time to populate. But it populate.
Okay.
So expiration day up top. And then as you guys can see on the screen here, there's a call on the left side and there's a put on the right side. And there's a strike price in the middle. So strike price is the predetermined price where you're gonna buy or sell the stocks at.
Okay.
It's like the insurance contract.
Right.
Like the criteria of the insurance contract. So, in this case, if I say Cody, or I say Shay, I want to own 100 shares of Apple stocks at a cheaper price. Okay, we look at the chart, we say 170 is a good price. Okay, we go here, pick 170, that's a strike price, right? And then if you see a blue, it's a buy or a sell, right?
Oh, you don't look at anything like open interest or volume?
Yeah, we can look at that, but it's Apple.
Oh,
it's Apple.
So any strike price will have a lot of volume.
On my other account, I have like open interest.
I
For
see.
people that doesn't know open interest, do you want to explain open interest?
You can explain it.
No, come on, I want to put you on the spot.
No, don't put me on the spot. It's options.
Okay, so, sorry. Okay, yeah, it's options. So open interest is basically how much contract are out there waiting to be filled at this any specific spot. And most people use open interest as the indicator of where the support and resistance are, because a lot of people are agreeing to that price point. So in this point, I don't really look at it because I just want to own Apple at a cheaper price.
Yeah.
Right. Another thing is I can look at Delta right here on the chart. Right now it's showing negative 0.262. So don't worry about the negative. Right, 0.262 means that if I go ahead and sell this put option, that means that I have 26% that by October 13, I will have to buy 100 shares of Apple.
26% of chance. Okay.
I need to prepare the money to buy 100 shares of Apple. So that's how Delta at this specific moment telling you. Okay, and I look at that. And I look at a bid and ask, and usually I want to say, okay, I'm selling the Apple put options at 170. How much am I getting paid? Right. So the bid is 193. The ask is 190. Again, the market is kind of closed, so it doesn't really make sense. But that just means that if I go ahead and sell this option, I will get paid 1.93 times by 100 because I control 100 shares.
Oh, so you get $193
USD
premium.
too.
Oh, US dollars.
That means it's about like 1,000 Canadian, right?
I think that's closer to 210, maybe.
Yeah.
But yeah, no, I guess
it's 1,000. I don't care.
One person got offended once I said that joke. I'm like, oh, $20 US, so that's like
1 million.
Yeah, Canadian dollars.
I keep saying that.
Yeah.
Yeah, it's okay. You have more followers, so you get more haters too. So yeah, you get paid 193. So usually my rule of thumb is if you're gonna do that, it's gonna be worth it, because on Interactive Broker, you pay about $1 to $1.5 per option trade. But if you're using other platform, you might be paying north of $10. So if so you gotta make sure you get paid more than $10 if you're gonna make that.
Yeah.
Otherwise, you're losing money right off the bat.
Option trading could be a little bit more expensive than shares.
A little bit more,
yes. But on Interactive Broker, it's not bad.
It's still the I wouldn't say the best, but it's the most cost efficient. Yeah, it's about $1.
Yeah.
The most cost efficient in Canada. And US, you have a lot more option.
Yeah.
Right. So
a lot more option.
A lot more option. No pun intended. So yeah, I usually at least want to get paid 1%, as in per month, right? I want to make sure I get paid, you know, if the strike price is 170, I want to get paid $193. Anything north of 170 for it to worth my time, worth my risk, and I get paid enough.
Okay.
Right. So this is a good price in my opinion. So I just say we're happy with the expiration date, 30 days out, the strike price of 170 based on our technical analysis, the delta of 0.26. I have 26% chance I might get assigned 100 shares of the Apple in 30 days. I have money ready. I have $170 times by the 100. I have like $17,000 USD sitting there ready to buy Apples, because at any time if market drop, you can get assigned a lot earlier.
Oh, I see.
You better have enough money.
Okay.
That's when a lot of people get into trouble during COVID. They use the money they don't have, and
the broker lets you execute that?
The interactive
You have
broker allow
margin,
you
right?
to leverage up to 3.33 times. But
Overnight? I thought it's 2 times only overnight.
No, it's 3.33. I think like maintenance market, like again, we're opening a can of worms here because every strategy is different. And then they do their own portfolio margin requirement and do a trade margin requirement. So,
I see.
So if people are wondering, you can do this. You pull up, you can see your, you know, right now we're buying, so make sure it's selling. So you got to hit this button. Now it's selling.
Okay.
Sell one option contract, October 13, expiring 170 put.
Yeah.
Okay. With that being said, maximum return is 189. Break even is 168. Why? Because, you know, if I buy 170, I get paid this amount. So they do the calculation.
Yeah.
They bring down cost of ownership. Right. And then here's a PML chart, and scroll down here, you will see the margin impact.
Where
right.
is it? Oh, I see it now.
Margin
Okay.
impact is, you know, 164.9.
Where
right.
it says 500. Wasn't this one?
Yeah, this is not like when you're selling put, just for
It says 516.
exactly. So this is very, like, basically margin impact is showing you 5,164. If you times that by 3.33, it's probably 170. It's probably 17,000. So it's allowing you to use 3.33 times.
Oh God.
But
okay.
for beginners, even for experienced people, don't use margin. So
Yeah,
if
don't
you
use
go
the
and sell a put of $170 on Apple, have 17,000 sitting on the side.
Yeah.
Okay. That's even if COVID happened, Apple dropped to 100. You just buying Apple shares at 170 and you can back whole. Eventually it'll come back. But if you don't, you're borrowing money. You're gonna get margin call.
Okay,
it's very scary.
Okay, I see.
Okay.
Yeah.
So with that, we're happy with that. We understand the margin requirement. We go hit the order. This is where it comes in. You know, kind of reiterate that, tell you what the delta is, you know, my account number and quantity. Like, you know, for the basics is like, you know, there's so many type of ways you can enter a trade.
Yeah.
By order type, there's limit and market. Market basically means it will get filled right away regardless. But usually I use limit, especially
Limit's
on Apple.
better, yeah.
Because Apple is a widely traded stocks, have a lot of liquidity. So I just use limit, and then I go to the limit price. I just put mid.
Mid. Okay.
And then, you know, time enforced day, display size. I play around with it. I used to not show it, but it's harder to fill. But if you show it, a lot of the quant trading will play with your trades.
Yeah.
So the moment you show it, all of a sudden thousands of trades will move their bid and ask. You're like, how did human do that?
But then, like, you're buying one quantity of one, probably doesn't matter, right?
Doesn't
If you are going to hundreds, then maybe.
I'm not trading. I'm just like $1. I don't. So, and another thing is you can turn on the price management algo. I don't know if you turn on.
Oh, I haven't tried that yet. I don't use
it help big time.
Really?
Algo will help you to get the best price.
Oh.
So you can hit on the information. It will tell you what price management algo is. But basically, if you're selling option, it will help you to get paid the most amount of premium. But if you're buying option, it will help you to pay the minimum amount of bet. So day trading will help too.
So what does that do exactly? Like adjusted
For example,
price you get filled.
so if I put mid, if they can help me get, instead of 1.91, I can get a 1.92. They will try their best to get 1.92.
Okay.
So I get paid $1 extra.
So does that mean you just kind of delay the execution time then? Like instead of getting filled right away, you kind of, the algo allows you to wait a little bit and get filled at 190 instead of 191.
Yeah, I know. Like,
Is that what happens?
in the back end is like a black box. So there's different priorities. You know, there's like different level. The more volume you have, you can, like when I was back in the day trading days, I had a coach. So my coach was trading volume so big, so he can tap into a VIP level. So you will get, you know, the orders are bigger than 50 per lot kind of thing. So they get the priority, commercial.
I see.
But anyway, this is like small stuff, so it doesn't really matter. Just knowing that price management algo will help. And then, yeah, you just, you know, do your Tinder swipe. And then.
But in this case, you always have to swipe right.
Yeah, you swipe right and you wait for it to get filled, and $191 will get paid right in your account.
Oh, okay. And then, so what happens after this? So let's say in 30 days, explain to our viewers what happens is Apple is, what's the strike price? It's indeed at 170 in 30 days.
So there's three scenarios here. Okay. One scenario is that if in 30 days, Apple stock price drop lower than 170.
Okay.
So by Friday around 5 p.m., Interactive Broker will force you to buy 100 shares of Apple at 170. So your money, 17,000 will go out, 100 shares will come in.
Okay.
But if Apple stock is above 170, if it's 170.1 or 180 or 200, you basically keep the money, get paid up front of $191.
Okay.
And your put option just disappears. And you just rinse and repeat.
And in this case, if you don't actually want to own the shares, I know you said to trade this strategy, you have to be prepared to own 100 shares of Apple at a cheaper price. But what happens if you don't want to do that?
They really shouldn't sell options.
Oh, I see.
But there are ways that you can close it earlier. For example, if tomorrow comes up, Apple go up by 10%. The premium price of 191 will probably drop to like 0.1, $10. So what does that mean is that I got paid 191, right?
Yeah.
But tomorrow when the stock price jump up like 10%, the chance of me having to buy Apple shares at 170 goes down substantially, right?
Yeah.
So in terms of insurance, the risk is a lot lower.
Yeah. Okay.
Lower chance that I need to buy 100 shares of Apple, right? So the premium price will drop as well. So what does that mean? That means I can pay 191. I can go out and pay $10 to close the contract.
Oh, I see. So you keep the difference.
Take the risk off, and I keep the difference.
Oh, so you're closing it early.
I can close it early. Yeah.
So that was a fun little demo about selling options, this really passive strategy that Cody trades. If you have any more questions for him, you can leave it down below and he can answer it. I just put you on the spot.
Oh my God.
You have to do it now.
I haven't answered a lot of comments, but I'll do it for you.
You should do it for my viewers.
For the first hour, I will sit there on the first hour, so make sure you put the comment down the first hour and I'll be there to answer it, just like Stephen Graham. How's that?
Oh, okay. Good. Okay, so now that people kind of have an idea about what you trade and how you trade, what's your day-to-day life like as an option seller? Let's say how many trades do you take per week or per month?
Yeah, so on average, my account, I was showing my account to you off record, right? The last year we make about 36%. I thought I was going to hit 40, but I'm never forcing it. That's just by making 1 to 4 trades per month.
1 to 4 per month.
Per month.
Okay.
Yeah.
And that's this is on the strategy that
set and done strategy, the fast money.
So not the individual stocks.
Individual stocks, I just go sell a put in 45, 60 days out.
Okay.
If I own it, I own it. If not, I repeat. Kind of
I see. Okay. Yeah. So 4 trades, per month.
1 to 4.
Okay. Yeah. And how many hours a week do you work?
So like it's actually around 30 minutes.
Okay. Per week?
But that's because I have the whole team support.
Right.
So back in the days when I don't have coaches, when I don't have analysts on my team, I do all the research on my own. I read the charts. I continue to update on the news. I draw the charts and I update my VIP. But then once we have our mastermind, I start, bringing up the best student to be my coach. My brother started helping me. I know you met him the other day. He's an engineer as well. And their students been with me for 4 years. So I just elevate them. Now they're day trader. They love it. So they read all the charts. They come off the newsletter. So even coming up, like waking up in the day, I can just read their report and make
see.
my decision based on that, and I just share with my group, not for people to copy, but there's beginners that are copying just because they're trying to learn the rope, and I show the reason why. But I don't really spend that much time because most of my clients are doctors, accountants, busy individuals,
Yeah.
so they want something that only takes about 30 minutes per week.
So you're saying as a trader who does that kind of option selling strategy, they can realistically expect to only work 30 minutes per week?
If they're picking individual stocks, no.
Okay.
I used to look at individual stocks. So my, like, what do you call it, watch list, 30 stocks on it.
Okay.
Then we try to clean out the ones that we don't like and put in the new ones. But for a said and done strategy, it's just S&P 500 future.
Oh, okay.
So
I
that's
see.
why we only track one chart.
Yeah.
It doesn't move as fast. We just need to know the macro.
Yeah.
Draw the charts, Elliott waves, support resistance, what's the percentage of scenario, then we make our trades accordingly.
Okay. It sounds like the only downside with that is that you need a bigger account. Like, let's say if you need to generate, I don't know, $10,000 a month to live on, you probably need $1 million,
So
right?
just reverse engineer.
Yeah.
If we're targeting 18 to 54% per year,
Yeah.
then reverse engineer that, right? Every month's about 1.5%. So if you want to make 10,000 divided by 1.5%, what is that?
You're asking someone who doesn't do math. I think that's $1 million.
Well, yeah, it's like
10,000 divided by 1%. Okay, and you need about $700,000, and you also
Yeah.
compound it over each month, right?
yeah, we don't really compound because this is our fast money, right? We
Yeah.
either take the money out,
Oh, you take the money out to live on.
or we just leave it in. But
Right.
like our minimum trade size is 5,000, but the ticker I'm using, which is ES, is
Yeah.
like 20K per trade. Not that we need that much,
Yeah.
but because when we're selling option, there's some margin requirement.
Yeah, for
We're-
sure.
We're always preparing for another COVID to happen.
Yeah.
We make sure we do all the back testing. We have like 250 pages of research paper. We'll continue to relive every day of COVID to say if that happened again, index dropped 30%.
Yeah.
And within that month, what are we going to do, right? So we're reliving that
Yeah.
on the back testing.
That's a good question. So in this case, how do you manage your risk? Let's say there is unfortunately another virus and everything gaps down overnight 30%.
Correct.
How do you mitigate that risk or get out? What's your exit strategy
Yeah.
if it doesn't work out?
So every time we make a trade, like you probably know IB Carry, the bracket order.
Yeah.
Right? We put in a bracket order. So every time we put in, there's a profit taking and there's a profit loss if we're going to get out of the trade. And we did our calculation and we used Tasty Trade to do the back testing and all that and
Okay.
other software. Our win rate is about 98%. Like the software shows 99, but I don't believe it. Based on my own calculations, 98% chance we're going to win. But that 2% chance is going to lose. Why?
Yeah.
Because if the index moved more than 15% in 1 month, we're in trouble. So we probably going to
see.
take loss about 3 to 6%. But you saw my account, if I'm up 36%, I take a 3 to 6% loss
Yeah.
every 2 to 3 years. So be it.
Okay.
So be it.
But you're also counting on the fact that there's only one such drastic event every 2 to 3 years.
Based
right?
on the
Okay.
stats, right? This is
Yeah.
real fact. Every 4 years, there's going to be about a 20 to 25% correction, whether
Yeah.
up or down. So every 2 years is going to be about 10 to 15%. Like June, we just experienced one that gap up.
Yeah, that was
and we
crazy.
actually got in trouble. So my account, that same account I show you, went
Yeah.
from 32% down to 24 because
I
it
see.
gap up too fast, and I have like neutral position and moved too fast.
Right.
So with our active management strategy, at that time I'm like, okay, do I want to take losses? Or do I want to active manage it? So we active manage it, we roll it out, and then my account went back up to 34% in 2 weeks. So
I see.
you will see a big like. If people want to see it, they can see. I can show it. Yeah.
Okay. You probably know I day trade stocks. Sometimes I do some swing trading. So I do a lot of technical analysis and fundamental analysis pretty much every single morning. So how much of technical analysis do you need to do to execute your passive income strategy?
Yeah. Like I said earlier, now my coaches are doing the heavy lifting, but they do draw the charts every morning. And because our set and done strategy, we only trade S&P 500 and doesn't move as fast, not as volatile.
True.
We still have a percentage of going up, what it kind of looks like, or what if it goes down.
Yeah.
So we still do that analysis, but other than that, we're looking for big events coming up in the week off or the following week to make sure that we try to dodge those and try to have less position if that's the CPIs coming out or Joe
tomorrow
is going to come out and talk about interest rate. Then we have less position because I don't need to bet on it. But the best part is that most of my position will not get into trouble unless the market move more than 10 to 15% in 1 month. So our room for error is really big in my opinion. So that's why I'm not stressing as much. But then it's because we have our active management skills. So we have a choice of either we're gonna 2% take stop loss or we're gonna active manage it. So for people who are more passive, doctors who don't have time, they just take the stop loss. But for myself or more experienced people, they just roll it out, keep paying credit, and then they just like, well, if it takes me 3 months to break even, that's fine. At least it's not a loss. Right?
But is chart reading still a skill you need in order to trade the strategy effectively on your own?
Yeah, I mean, it will help. It will help for sure.
So technical analysis
is one.
Yeah.
But a lot of time, technical analysis is just a small factor. Fundamental analysis is for the big events. But I think the most important part between technical and fundamental is that how do you integrate this? So like for us, we have expensive subscription on the back end of where all the big corporations director, are they selling or buying stocks? How much? Right? And we track all, the famous Nancy Pelosi, what is she doing? Right? We think about where the money is flowing. So like, for example, when the markets really have a risky appetite, it will flow to growth stock. Even more riskier, they'll flow to crypto. But if people want to take risks off, they will flow from crypto to growth stock. Even if they think the market is coming down, they will flip it to like Coca-Cola, McDonald's, all this defensive stock, right? So you have to kind of forecast to say if that happened, where would they move the money? So I think that's the part that a lot of people thought the technical indicator will tell you, but they didn't forecast. That's the main part, right? But if you're day trading, you're fighting within a few hours of the day. Then, what's your trading strategy? But that's a little bit more difficult, a lot more stressful. I used to do that. And,
So you still have to keep an eye out on like the fundamentals and economic data and the trends of the market. Right. Any indicators, or that's not important at all?
It's important. I mean, our coaches use the typical RSI.
I see.
We use EMA. We have our proprietary technical indicator. I think you can actually find it on TradingView. If you type in "say yay," I trademark that. It's basically just like we're finding the trend reversal, but it's EMA 5, 20, and 40, so it might not be as applicable to you because you're probably looking at 5 minute, 10 minute, and 30 minute, or something like that. So different time frame, right? Because of our trade position.
Interesting.
But it still help.
So in your opinion, how can stock traders, day traders or swing traders, maximize their profits using options?
Wow, such a loaded question. I think I kind of touched on that early on. For options, for you to make money, like for example, if you're trading stock, if you're betting it to go up, you're not leveraging. You put in how much money you have, the percentage that it goes up is how much percentage you're gonna make, right? But an option is if you buy that option, that $10 going in is leveraging. You might be using $10 to control $100 worth of the stock. But two things has to be right for you to make money. The time has to be right, and the stock price has to be right. And most likely, you're going to be wrong most of the time. And that's why if you want to make more return using that, you have to be right on time and the price. Does that make sense? Does that kind of make sense?
But you're talking about day trading options.
If you're day trading option. But if you're like, are we talking about investing or trading?
No, I think in general.
If you're an investor, then I saw your portfolio on Blossom. You have some Apple, you have some Tesla, Google,
Yeah.
Microsoft. So if you have anything more than 100 shares of the stock, you can go ahead and sell a cover call. That just means that if Apple right now is 170,
Okay.
right, then you can go sell a cover call at 180. What that means is that, hey, I agree to sell my Apple shares at 180 if by the expiration date, the stock price is above 180. And you get paid a few $100 while you wait.
I see.
So
Okay.
you're right now the price is 170.
Yeah.
The cost of average is like 160. You agree to sell at 180. So if that stocks get called away, you're forced to sell the stock. You profit the difference of $20 times by the 100. That's your
Okay.
appreciation. You keep the premium of selling the cover call, and you keep the dividend while you're holding the stock, right, every quarter.
Oh, I see.
So that's a good way to maximize it.
Do you do that yourself? I know people
Yeah.
use that to hedge their long-term investments too.
I wouldn't call it hedging. I mean,
Yeah.
it just, to me, it's a very low risk way of free money, because if you're going to hold that stock for the long term,
Yeah.
and if it's a boring stock,
Yeah, like Apple. Well,
Apple's not that boring.
Okay,
It
you're right.
quadruple in like-
Yeah, you're not
in
that,
like
it's
a
not
few
that
years.
boring. Yeah.
so, but it's a good way to get extra income, because you can't really control the stock price. But when you're waiting, if you have more than 100 shares of the stock,
Yeah.
you can go sell a cover call, and that can make you extra 1% to 12% per year just by
I
selling a
see.
cover call. And that can bring down your cost of ownership.
Right. Okay.
And eventually you can own the stock for free. If you sell it, every month you bring down the cost of Azure for $2. Eventually, if you sell enough, you own Apple for free.
I think the only downside is that becomes active trading.
Oh, you can,
Yeah.
when you sell cover call, you can set it as an expiration date for 30 days, 60 days, or even 90 days. So every 90 days, I put in alarm clocks, and I come back and, like, my mom asked me to manage her account. I'm not going to be very active, so I just set up an alarm clock every 60 days. I go back and sell my cover call.
Okay.
I just buy some SPX, buy some Apple, and I keep selling cover call. Every 60 days, I come back and sell another cover call. Oh, I lost it. Okay, make the profit, and I sell another put to try to get back in.
I think that might still be active trading though, no? Do you do that in the same account as the long-term investment?
Yeah,
account?
I mean, depending,
Gotta
right?
be careful.
In Canada,
Yeah.
if it's registered account, you can sell cover call, but you cannot sell put option to buy stocks. You can
I
only sell
see.
cover call. It's fine, and then every 60 days you make one trade. It's okay.
Okay.
And
hope.
it's a
Yeah.
again, I'm not an accountant, but if
Yeah.
people want to look into it, there is a tax law that was set in 1970. I forgot it's called IT 7455 or something. Don't quote me on that. But ask your accountant. It's a very old law that will say that if you sell options, sell puts and cover call, and if you maintain your behavior every year, then you can treat it as a capital gain.
Oh.
So there is a tax law for
I
that.
see.
But you have to be
Okay.
consistent, right? But
Yeah.
you're right. You got to be very careful.
Gotta be careful. Okay, so tell us about your biggest wins or losses trading options, if you care to share the stories.
Yeah, I mean, my biggest losses will be on the buying side of options. So
Okay.
I remember, you probably know the stock called TSM, right? The
Yeah, of
Taiwanese
course,
semiconductor. Like, we're proud of Taiwanese.
Yeah.
Right,
So you bought
semiconductor.
the stock or the options?
No, I bought the option. I don't usually buy options. I take my profit, and then only a certain amount of that I used to buy option. And when I buy options, I buy the expiration days of 2 years out.
Oh, you're buying leaps.
I'm buying leaps.
Okay.
So I bought it
see.
right at the hype of around like November 2021, hoping that within 2 years it will work out.
I see.
But then, as we all know, tech stocks start coming down. So, all that's kind of in vain, right? Because I couldn't really do much of it. I can roll it and all that. But,
Right. Yeah, 2 years is coming up, right?
yeah, 2 years is coming up, and I'm like looking at it as like, well, I spent 10K, 20K on it, hoping that TSM will gradually go up in 2
Yeah.
years, but it was a correction. I'm like, well, yeah, that's my losses, and usually the big losses on the buying side of things. And I know
I
it
see.
going in, so if I make, let's say 100K on this account, only take 10% of the profit to go buy options. So I know if I lose it all,
Okay.
it's fine. But if I win, it will actually contribute to that 100K. Instead of only making 100K, I might be 120, 140,
Yeah.
160. But if I lose, okay, I make 80K.
I see.
So
Okay. But that's not really your regular strategy, buying options.
No,
right?
that's like
that's one thing you do once or twice a year.
Yeah. Like if I see like a good stock, I'm like, okay, I think it's a good point. There's some support, there's some momentum. Let's go.
I see.
But then
so then you're almost momentum trading at that point because it's not
2 years
hedged,
out,
right? Oh, to the
it's 2 years out, and
Yeah.
then you can the good thing about options is that I can actually sell cover call against it.
Right.
I pay 10K, but I can sell cover call against it to get paid $400 per month to bring down
the cost basis.
Yeah. So it depends on how active you want to be. But at that time, I'm just like, you know what, this is gonna be a leap. I'm gonna buy. I didn't do much management, so I look at it, I'm like, 100% unrealized losses. Okay. Wow, I've never seen that before. TSM. That's TSM.
Yeah.
So it kind of hurts, but I'm using a minimum amount of money to control 100 shares of TSM.
Yeah.
Right?
Okay. And 10,000 in that one position. I mean, in the big grand scheme of things, not.
Yeah. Usually it's like a quarter. So if you want to buy 100 shares of TSM right now, that's say $100.
Yeah.
You need 10,000.
Yeah.
So usually you only need to put in 2,500 to buy the leap, depending on how close to the money.
Yeah.
I know we're not gonna get into the technicality of things.
But you are really out of the money.
No, I'm really in the money.
Okay.
I'm really in the money. As in, if TSM was at 100, I bought a call at 60, 50.
Okay.
I'm like so in the money.
I see.
So in the money. So the reason why I want to buy in the money is because I want less extrinsic value. I want less time value going against me. I want all the value to be on the intrinsic side. So
I see. Okay.
maybe that's confusing a lot of people. I'm sorry.
Yeah. But you're gonna let it expire worthless then at this point?
Yeah, I can roll it, but there's really no point.
No point. It's already, you already lost
Rolling just means I close it and open a new trade,
exactly.
right? So,
okay.
Yeah, that's
so
my
what
biggest
about your biggest win?
Biggest win, as far as I remember, like selling options is boring. Like you don't get big win. Yeah, the big win might be, I closed in the same day, 60% profit. Okay, I don't get excited. Like when with my strategy, I have no emotional attachment to any of my gain or losses, especially on the said and done.
That's good.
I train. I'm kind of like a day trading because I went through those days. So.
Yeah.
So now I'm training. I look at a 7-figure account. Oh, down 20%. Holy cow, 200K. Doing like a pullback and all that. But I'm like, okay, but it's gonna come back, right? But you kind of treat it as a video game in real life. But when you treat it as a video game and you have a more rationale. Right? I almost treat it like a paper trading account. And you do much better things. And I show my trades to all my students so that I make more risk-averse trades.
I see.
So coming back to my biggest win, October 2020, right before the U.S. election, there was a big drop. I don't know if you remember.
October
2020.
I don't remember a big drop.
Donald Trump... Sorry, that was like reliving the past. Donald Trump got elected around November, I think the 3rd.
Yeah, okay.
So October, everyone was really worried. Donald Trump is coming up. The war is coming to the end. They're going to build a wall. So the volatility skyrocketed. The stock price dropped a lot. So at that time, I went in and sell puts. I put in big position on the selling puts on blue chip stocks and some of the growth stock. And right after the election, right, the volatility dropped and the stock price go up. Both work in big favors. So that was like 100K that month.
Okay. But that sounds like a short-term trade then. Right?
Yeah, that's why 10% in a month. So I put
see.
into context 10% a month. We don't usually get that, but on those days when all the stars align, volatility goes down, stock goes up, we're like, we make 10%.
So you do take these momentum trades once in a while. That's kind of outside of the passive
Back in the
strategy.
days, now I'm more think about how do I avoid those risks. So if I now relive that, I might actually only put on light position. So like the strategy right now is whenever everyone's really greedy outside, it's kind of like the bull bear trader, right? When everyone's really greedy outside, I put on less position. But when everyone's really afraid, that's when the volatility is really high. There's actually less chance that the stock will drop more because it's already been a lot of sellers already sold. Right? So that's when we're gonna go out and sell more options.
That makes sense.
But like right now, when like sunshine and rainbow, I actually put on less position. Right? When we have no direction of the market really, right? So
for all your different strategies, Let's say take your most commonly traded one, the passive income strategy. How long do you usually hold those positions?
It could be a day.
Oh,
it could be
really?
20 days. Yeah,
Okay.
sometimes if the market move in our favor or the volatility drop, right, it's a selling option, less risk, so we will be able to close our position at
Okay.
a profit. But usually it's between like 5 to 20 days.
Okay, so you usually go for the monthlies then.
Maybe like 45 days, 60 days usually.
Quarterly. Okay.
Yeah.
Got it.
I just want less trouble.
Yeah.
Right? A lot of people is like, Cody, why don't you sell a shorter period? You can get more return. But I'm like, I want less trouble. I only want to make a few trades.
Less risk too.
Yeah, I want to
Is
say
it?
less risk. I
Yeah.
just want to get paid more money,
Yeah.
managing less, and I still hit my 18 to 54. So I'm good enough. Like I don't
Okay.
need to make more.
Okay. So on average each month, what's the percentage you're aiming for?
We're targeting like 1.5 to 4.5.
Okay,
So you
each
saw
month.
my accounts at 36.
Yeah.
Right on like 11 months.
Is that
kind of thing.
that's this year, right?
Yeah, well, it's not even 1 year yet. Like this account was created September 23rd. So almost 1 year.
23rd. Oh, okay. Almost 1 year. A year ago.
Yeah,
Okay.
and I only started trading this account in October 7th. So I didn't.
I see. Okay.
Yeah, I put in 18,000 and yeah, now it's like 25,000.
Okay.
Yeah.
Got it. So what's your personal risk tolerance like? I know earlier you mentioned you don't want a lot of trouble. Like what does that mean? What's your risk tolerance?
Like for a set and done strategy, we have the bracket order, so we know how we're gonna take profit and how we're gonna take losses in case I don't even have internet. If I'm in a
I see.
jungle, I'm in a rainforest, I
Okay.
have trades on, like it will take profit or losses for me.
Okay.
Right? So like when we take losses, it could be anywhere from 2% to 6%. Right? But when we take profit, it's a lot smaller.
Okay.
Right? And the way we target for 1.5 to 4.5%, it's not like every trade we put on, we try to make 4.5%. It's because every trade we put on sometimes 0.5
Yeah.
per month, sometimes 1%. But it's because we rotate the capital. We
I
take the
see.
same amount of risk and we close it and we put it
okay.
on again. Right? Then we basically, I wouldn't say double down, but we rotate our capital so that we make double or triple of the 0.5%.
Okay.
So we don't take more risk. We take the same amount of risk,
Uh-huh.
but then we make more money because we're better at doing this, right? Based
I
on
see.
the charts. You know.
So at any given time, you only have that one position then. If you're trying to close it, then rotate the capital.
Every time sorry, I'm trying to understand that question.
Oh, because you said you close it and rotate the capital. So use the profits to put in more and then to make those monthly returns.
Yeah.
So does that mean, do you only hold one position at a time then? Because your there's capital limit, right? And
Yeah, the margin
maintenance.
requirement.
Yeah.
Yeah, so we never go above the margin requirement. That's for example, each trade is about 20,000 for my bigger account, for
Okay.
people with bigger account. But usually you only need 5,000 to 8,000 to open it. But the reason why we put 20,000 is because if COVID ever happened, we have much more margin. If Interactive Broker do reduce the amount of
Yeah.
margin requirement, we have that room. Right?
I see.
So we always look at the worst case scenario and we want to survive the black swan event. We're not trying to make the maximum, but we want to be the last one standing.
Okay, so coming back to a full circle, back to trading stocks. Do you think options trading is riskier than stocks?
I think
What's your opinion on that?
it's definitely riskier.
Okay.
Because there's more variables. For example, volatility,
Yeah.
margin requirement, and all that. It's not for the light-hearted. Like if you're gonna trade option, a lot of people get into trading option, get hurt because they just know enough, and they just follow other people like momentum stocks. And
Yeah.
they don't really know that for it to work out, time has to be right, price has to be
Yeah,
right.
they get into a scalping game.
Yeah, they get into the scalping
Yeah.
game, and the probability of winning that is really low. So they might put on 10 trade, and even if they win 6, which is 60% win rate, they could still be losing money
Yeah.
based on the math, right?
Yeah.
So, yeah, I think options definitely one step ahead of stock trading.
Okay.
I think you should master stock trading, and then option really just give you the option to leverage or to be more
I see.
flexible. but you should master stock trading if you're ever gonna do that first.
Okay.
But for me, I only sell, so
Right.
I don't try to day trade.
Okay. Interesting. So as a full-time options trader, you still recommend people to understand.
30 minutes call full time. Okay.
You still recommend people to learn, at least understand stock trading first before trying to trade options.
Yeah. So like, even for my beginner course, I bring people who are totally green to the stock investing world. I let them know what a stock is.
Yeah, that makes sense.
All that means, and then transition them to option, right? Because they have to know what the underlying is.
To understand the potential risk and how much leverage they're taking. So what do you think about, because obviously we're both on YouTube, YouTube, TikTok. There's a lot of people who talk about, if you have $1,000, it's okay. Just start with options trading, like to brand new beginners.
Yeah.
What do you think when you see those kind of advice, and what's like the risk associated with that?
Yeah, it's funny. I actually just make a short form video. It'll probably come out in a few days.
Oh yeah?
But if you only have $1,000, don't trade option.
Okay, got it.
Because most people will be like, you know what? That's $1,000 I can lose, so I just gonna go and gamble it. But guess what? That's $1,000 you work hard to earn.
Yeah,
and that's why that's keeping you from becoming a millionaire, is because you have those kind of mindset, right? So like you said on other videos, if you have $1,000, go on YouTube University, or go buy a free book, or go buy a book and understand that first, and then take those skills, make more money, and find a lower risk way to trade option. Like most preferably, I think selling option, but you need at least $5,000, right? So get to 5,000, but before that, don't go and get into the hype of gambling or speculating. Like a lot of time is that you go to a casino. The only time I win is if I play a new game I never played before. And I look at, this is a funny thing. That's my strategy when I go to a casino, just in case people wonder. I go to a casino, I sit on a table, I ask around, I say who lost the most amount of money. And whatever that guy does, I do the opposite. That's my highest win rate. Yeah, that guy is just not on the roll, and I just do what the opposite that he's doing, and I make most money. And I walk away after 2-3 wins, right?
But, you have to walk away. The longer you stay, the odds decrease. Yeah.
And then that's the same thing with trading. They're gonna get some rookie's luck, but after 2-3 trades, they might give all the profit back.
Yeah.
And they'll be like, yeah, it's only $1,000, just gonna make it come back, but that's $1,000 because the math works this way. If you lose 10% of the $1,000, you need to make 11% to get it back.
Makes sense. Yeah.
If you lose 50%, you need to make 100% to get it back. If you lose 90%, you need to make 900 times.
Yeah.
And people don't get that. So if you start having the right mindset about money, it's not about growing, it's about protecting first.
Yeah, for sure.
You will become a millionaire.
Very cool. Thank you so much for the insights.
Yeah, thanks for having me.
Thank you, Cody. We're gonna do the fist bump. I've never done fist bumps before.
No? What do you do? High five?
High five. That was a high five.
Okay, one more.
Okay, good. Where can people find you on social media?
I have an Instagram account.
Okay.
It's Cody Ye, Cody__Ye. We have a YouTube channel called Cody Ye Investing.
Okay.
You can find me there, or you just Google me. I've been on like 80 podcasts.
Ye as in like Y-A-Y, right?
Yeah.
Yeah. Cody Ye. Cody Ye.
Yeah, it's Y-E-H.
Okay, sorry.
It's pronounced as Ye.
Cody__Y-E-H on Instagram, and Cody Ye on YouTube.
Yeah, Cody Ye Investing.
Okay. Yeah. Thank you, Cody.
Yeah, thanks for having me.
So today's session is definitely very fun and informative. Cody made it very simple for you and I to learn more about options trading. However, I hope you guys can also hear the music beneath the words. Always be careful with risk management and stay close to your edge and do not deviate from your process. For Cody, he's backtested his options trading strategies for years, and now he only focuses on trading the major indices and futures for SPY. If you enjoyed today's podcast, make sure to smash the like button down below. And if you want to hear from more professional traders and their experience and strategies, then you should check out these videos over here.